All right. Welcome, welcome, welcome. I am so excited that you're here. How are you all doing on this beautiful Wednesday? We are right in the beginning of tax season. The IRS opened on Monday, so you should be preparing to file your taxes. For those of you who don't know me, my name is Kiwanis Rucker. I am the owner of KMJ Financial Services, where we specialize in tax preparation and credit repair. I have an MBA. I am also a board certified credit consultant, and I am your podcast host of the Credit Refresh podcast, where season 2 starts on March 1st. If you haven't listened to season 1, go take a listen to season 1 wherever you listen to podcasts, Apple Podcasts, Spotify, Stitcher, iHeartRadio, Amazon, wherever you listen to podcasts, you can take a listen to the Credit Refresh podcast, and then let me know what you think. Okay. If you are watching the replay, let me know in the comments. Type hashtag replay gang so that I can see you. If you have any questions, if you're watching now or even if you're watching the replay, go ahead and drop those in the comments, or you can send me a DM with your questions and I will be happy to answer them. So let's jump into today's topic, which is taxable income. Now, I know this is going to be a lot of information, but I want you to know the information so that when you go to file your taxes, you know exactly how much you should be taxed on. So, taxable income is any income that is subject to income tax. It's calculated by taking all of your income and then subtracting any deductions, exemptions, credits that are allowed by tax laws. The result is what will be used to tax you with. Now, there are some things that cannot be taxed, which is like child support, interest from any municipal bonds, life insurance proceeds, disability benefits, capital gains from the sale of a primary resident, and is limited to $250,000 if you are single, and then $500,000 if you're married filing jointly. Gifts or inheritance, and then note that gifts are not taxable by the recipient. So if you receive a gift, it's not, you don't have to pay taxes on it, but there are some special tax rules on gifts. So let's start by how do you actually calculate your taxable income. So first you're going to calculate your gross income, and you're going to add up all your taxable income like wages from a job, income from a side hustle, investments, all of that stuff. So let's look at an example. So you add up all your tax sources of income. In this example, for 2022, we had $75,000 in wages, $1,000 in taxable interest and dividends. So maybe they sold some stocks of share stocks. $10,000 from a side hustle, and then $5,000 from a gift from a grandparent. Note here that the only thing that is not taxable, so you're going to remove that from your gross income, is the $5,000 from the gift from the grandparents. So that makes your gross income $86,000. Okay. Next, you would do any adjustments. You're going to make any adjustments to your income. So adjustments to income go on Schedule 1 of your tax return. They are also known as above the line deductions because they appear above the line for adjusted gross income, AGI, on Form 1040. They include contributions to any health savings plans, self-employment, retirement plan, health insurance plans, premiums for self-employed people, student loan interest, etc. You can find more information on what you can make adjustments with in IRS instructions for Form 1040. So let's go back to the example. So this person contributed $3,000 to a health savings plan in 2022. So when you subtract the amount of gross income, so you will subtract the $86,000, which is what you got in step 1. You will subtract $3,000 from that, and that makes your AGI, adjusted gross income, $83,000. Now, step 3 is itemize or claim the standard deduction. You must choose between either itemizing or taking the standard deduction. You cannot do both. And normally you're going to choose whichever one is easier for you or will result in a lower tax bill. The standard deduction is the flat amount determined by the IRS based on your tax filing. And then itemizing is you keeping a track of everything that you have spent throughout the year on any um, charitable contributions, out-of-pocket medical expenses, home mortgage interest, all of that, and then you will list all of these expenses on Schedule A and attach it to your return. So, for example, let's go back to our example. In this example, we're just going to take the standardized deduction. This person is a single person. They don't make a lot of contributions or things like that. Then the standard deduction is what is most widely used for 2022. The standard deduction is for this particular filing status is $12,950. So you would subtract that from the $83,000, which we got in step 2 of the AGI, and your amount that can be taxed is $70,050. So instead of taxing you on the $83,000, you can only be taxed on the $70,050. Now I know this has been a lot, and you may have questions about what your taxable income is. You can drop those questions in the comments, or you can send me a DM. I will be happy to answer your questions. As I stated before, the IRS opened on Monday, and my team is ready to work with you. We can file taxes in all 50 states. You can go to bookwithkiwanis.com. That is bookwithkiwanis.com. Hit that first button to start the process. Y'all meet me here next Wednesday, same time, same place, where I'm going to give you some more information on taxes. Until next week, y'all be safe.